If you're a business owner and you survive 2025 without a complete meltdown, congratulations, because this year threw everything at us. We had reporting requirements that appeared, disappeared, and then vanished entirely. We had the biggest tax overhaul since 2017. The IRS started hunting high-income business owners with AI-powered audits. And through it all, artificial intelligence went from interesting experience to, if you're not using this, then you're falling behind. Hey everyone, I'm Jeff from Proseer, and we help business owners navigate exactly this kind of chaos. And here's what nobody's telling you. While most business owners were just trying to survive in 2025, the smart ones were quietly positioning themselves to dominate 2026. By the end of this video, you're going to know the 5 things that actually mattered this year, why they mattered for your business specifically, and what you need to do about them in the next 30 days. And if you want to stay ahead of changes like this instead of constantly reacting, hit subscribe, because we break down one major financial shift every week before it hits your bank account. But first, we need to talk about why 2025 felt so chaotic in the first place. Think about it. When was the last time you saw a federal reporting requirement literally go from mandatory to suspended to completely eliminated in the span of 3 months? That actually happened in 2025. Nobody could predict what rules would exist next month. But here's what I discovered working with a lot of business owners through this chaos. The ones who came out ahead weren't just reacting to changes, they were using them. So let's break down what actually happened, starting with the story that dominated the first quarter of the year, the BOI reporting saga. The beneficial ownership information reporting saga was wild. Here's what happened. In 2021, Congress passed the Corporate Transparency Act, requiring most businesses to report their owners to FinCEN, the Financial Crimes Enforcement Network. The deadline kept moving, people were scrambling, and then the courts started blocking it. December 2024, it was blocked, then reinstated. According to FinCEN's interim financial rule issued March 21st, 2025, US companies are now completely exempt from BOI reporting requirements. Here's why it matters. If you're a business owner that spent time and money filing these reports, well, good for you, but unfortunately, that was all unnecessary. All the requirements and fear that went into trying to catch up to this requirement and understand it, well, it was unfortunately that you didn't need to worry about it at all after it's all said and done. So what's the lesson? The compliance chaos created a massive demand for advisors who actually stay current. If your financial team is still operating on last year's information, or they're not up to date on changes, then you're likely behind. Now, while everyone was distracted by BOI reporting, something way more important was happening. Tariffs were reshaping business costs. If you're in construction, real estate development, or you buy any materials or products internationally, which is a lot of businesses, tariff policies hit you hard in 2025. And unfortunately, these policies fluctuated throughout the year, creating uncertainty in supply chains and forcing businesses to build bigger cash reserves. The National Association of Realtors reported in March 2025 that commercial real estate developers saw operating expenses for materials rise significantly due to trade policy changes. Here's what we saw with our clients. The ones who got creative with suppliers locked in pricing early or adjusted their business models and came out ahead. The ones who just hoped tariffs would go away, well, unfortunately, they're still playing catch up. But honestly, the tariffs were just the opening act. The main event dropped in July. On July 4th, 2025, and yes, the symbolism was intentional, Congress passed the One Big Beautiful Bill Act. This was the most significant tax overhaul since the Tax Cuts and Jobs Act in 2017. Here are some of the big headlines that changed. 100% bonus appreciation is back. If you're buying certain equipment, vehicles, or property for your businesses, you can now deduct 100% of the cost immediately instead of depreciating it over the years. For construction companies, law firms buying technology, or anyone making large purchases, this could be massive. Next, R&D expensing got fixed. If you're investing in research and development or technology, you can now deduct those costs immediately instead of amortizing them over 5 years. This is a major change from the prior law, which required us to capitalize these costs and amortize them over a number of years. Software development, process innovation, these are all things that are immediately deductible. Next, the SALT deduction cap was modified. The $10,000 cap on state and local tax deductions just got adjusted, which matters hugely if you're in a high tax state and you have high income. Now, with the new bill, some of the changes are retroactive, so it makes sense to talk to your tax accountant to review your case and see if you might be entitled to amend prior returns and get some money back this year. Now, before you take any action on prior years, hold that thought, because we first need to talk about enforcement. While Congress was handing out tax breaks, the IRS was simultaneously announcing something very different. They're coming after high-income business owners. According to a February 2025 announcement, the IRS is prioritizing audits of businesses over $10 million in revenue and individuals with high income, specifically targeting partnerships and pass-through entities. Here's a direct quote from the IRS. Audit activity involving large businesses and high-income individuals is at a historically high level, while audits of smaller businesses and lower-income individuals will remain at historically low levels. Translation: if you're successful, you may now be in the crosshairs. But here's what's really scary. They're not just increasing audits, they're using AI to select who gets audited. According to audit defense specialists, the IRS is deploying advanced analytics and AI-based selection models that flag discrepancies in real time. The question isn't, will I get audited anymore? It's, are my financials ready if and when they come? If you can't answer that question with absolute confidence, you have a right to be concerned, and you probably should fix it as soon as possible. Now, I've been talking about chaos, compliance, enforcement, all the stressful stuff, but there's actually one incredibly exciting thing that happened in 2025. 2025 was the year that AI became non-negotiable for businesses. If you're still thinking of AI as that thing that might be useful someday, you definitely need to pay attention. 2025 was the year that AI went from experiment to expectation. According to Relay's 2025 Small Business Survey, 64% of business owners now say they would trust AI to manage their cash flow. Nearly 1 in 3 are already using AI tools in their daily operations. In accounting specifically, AI went from being a novelty to being the standard. Forbes reported this month that the major accounting platforms, QuickBooks, Xero, Sage, FreshBooks, all released AI features this year that fundamentally change what accounting can mean. So what changed? AI can now categorize transactions, predict cash flow, identify tax deductions you're missing, flag potential audit risks, and generate financial forecasts almost automatically. One of the quotes that I really like is the CEO of Xero literally said, "AI makes accounting sexy again." Now, I don't know if I'd go that far, but it definitely makes it faster, smarter, and more strategic. And here's the controversial part no one wants to say out loud. If your accountant isn't using AI in 2025, you're probably paying for an outdated service. Think about it. Would you work with a marketing agency that refuses to use email or a law firm that only uses typewriters? Of course not. The same logic applies to accounting. The role of an accountant has fundamentally shifted from a data entry person who files your taxes to a strategic advisor who uses AI to find opportunities that you might be missing. At Proseer, we've integrated AI and other technology into our workflow, not to replace our team, but to free them up from the repetitive stuff so we can actually focus on helping you make better decisions. And according to Snyder's analysis of 2025 accounting trends, AI doesn't replace accountants. It actually liberates them to do advisory work, fraud detection, and financial forecasting instead of manual data entry. The businesses that embrace this shift in 2025, they're entering 2026 with better data, better forecasting, and better decision-making capabilities than their competitors. The ones that didn't, well, they're still waiting for their bookkeeper to close last quarter. Okay, so 2025 was a lot. BOI chaos, tariffs, tax overhauls, IRS enforcement, and AI transformation all in 1 year. Here's what you actually need to do about it. Action 1. Review your capital purchases for 2025 and the plans for 2026. With 100% bonus depreciation back, if you're planning on making any major equipment or property purchases, now's the time to strategize timing. Talk with your tax advisor about whether accelerating or delaying purchases makes sense. Action number 2. Get your taxes reviewed by a professional now. If you're a high-income business owner, you should assume that you're on the IRS's radar now. Have a tax professional review your returns and documentation and make sure everything's in good order. Don't wait until you get a letter from the IRS. Action number 3. Ask your accounting team what AI tools they're using. Seriously, if the answer is none or we're looking into it, that's a red flag. Your financial team should be leveraging technology to give you better and faster insights. Action number 4. Do a tariff impact analysis if you buy internationally. Look at your supply chain, your vendors, and your costs, and model out different scenarios. Build contingency plans. The businesses that survived 2025's tariff chaos were the ones that planned ahead. Action number 5. Block out 30 minutes at the end of this year or in Q1 to do strategic tax planning. Not compliance, strategy. Take advantage of the new rules. The One Big Beautiful Bill Act created opportunities, but only if you actually use them. Look, 2025 was chaotic. But chaos creates opportunity if you know what to do with it. Now, if you want to know what's coming for 2026, you should watch our next video where we break down our predictions for next year. And if this video saved you from walking into 2026 blind, hit subscribe. We drop one video like this every week that helps keep you ahead of changes instead of scrambling to react. Thanks for watching and see you in 2026.